Donald Trump today cost Australians another $100 billion with his tariff war. If you've got shares, if you're in a super fund, you've been hurt. And there's more. The Australian dollar finished around 60 cents today. It's lost 13% of its value since October. Too bad if you were going overseas or buying something from overseas. In America, the mayhem is causing cracks right at the top of the Trump administration. Stocks there fell 10% at the end of last week. More falls are expected tonight, but worse for Trump is that Elon Musk, the owner of X, the man heading Trump's cost-cutting, has just posted an attack on Trump's top trade advisor, Peter Navarro, the man behind this tariff war, Trump's tariff war, accusing Navarro of having a problem ego, of having bad credentials, I mean, Harvard, or never having built shit, excuse the language. And Navarro, in his turn, said Musk was just talking from his wallet.
We just have to understand, Elon sells cars, and he's in Texas assembling cars that have big parts of that car from Mexico, China. The batteries come from Japan or China. The electronics come from Taiwan. And he's simply protecting his own interests, as any business person would do.
Joining me from Washington is Australian Stephen Hamilton, Assistant Professor of Economics at the George Washington University and a visiting fellow at the Australian National University. Stephen Hamilton, thanks for joining me again. How bad is this sell-off?
Yeah, so, obviously we've seen the Australian market open. The US market won't open until tomorrow morning. The futures indicate that over 3 days it will be the worst crash since 1987, which is worse than 2008, worse than COVID. Pretty significant in historical terms, just billions and billions of value wiped off.
It seems to be about more than just Donald Trump's tariffs now, doesn't it?
Well, I think there's two things to think of. Donald Trump could come out on Monday morning and reverse everything, delay it a month, and say, oh, well, let's wait and see what people offer me. But I think the bigger issue is, there is a degree of uncertainty now that has been injected into the system that can't be unwound, right? I think a lot of, big investors, even just mums and dads thinking, should I buy a fridge, right? Everyone is going to be sitting on their hands to wait to see what happens. And so I think that uncertainty, that is the big cost of these moves. And that's the sort of thing, frankly, that could drive the US economy into recession.
How much of this is an overreaction or, in fact, maybe a wise reaction to the inflation that we've seen in the stock market values over the last year and a bit? They've run very hot. Is this just coming back down to normal?
To be honest, I don't think so. Here's the thing. The US economy, the recovery since COVID has been very robust. And there's a huge difference between what's happened in the US and what's happened in Australia. So Americans have achieved quite remarkable increases in productivity since COVID, right? So the real economy has been stronger. They've managed to have strong employment, but they've also managed to keep productivity up, which has meant the US economy has been very strong, which has brought profits, good conditions to US businesses. So I think that the stock market, has really reflected pretty strong fundamentals, right? And that's a miracle to have achieved that kind of robust growth over such a long time is amazing. So I don't think there was anything about the US economy pre-Trump being elected that gave me any reason to expect that, there was a bubble or there was anything that needed to collapse. Honestly, this is an extraordinary situation. A single person can sign a single executive order and wipe 20 to 25% off the value of US stocks. That is truly extraordinary.
It is amazing to me. What is the message here for Australia? You said, well, look, the rise in stock prices in America, it had robust productivity growth, et cetera, et cetera. Here we have not. We've had almost no productivity growth, very, very little.
Negative,
most of the economic growth we've seen has been through government spending, not private spending. I think, to me, given this is happening in a in an election context is a real wake-up call to the need to get cracking on economic reform. What is it? What is the message you see in it?
Yeah, so I think there's two things. One, there is Australian policymakers need to be, watching this very closely, because I think, as we've discussed before, Andrew, I think that the sort of contagion could spread very easily from Australia through China, through a global recession driven by the US, through a sort of surplus of Chinese goods flooding into Australia. There are a lot of effects that go well beyond our very small trading relationship with the US. So that's one, right? We need to be very vigilant to act quickly if there are big economic effects on Australia. The second thing is a longer term question, right? I think Australia is a little country. We have to trade with the world. We are therefore very exposed to global conditions. And so I think, we've been able for more than a decade to be quite complacent, to be able to sell coal, iron ore, gas to China without really thinking deeply about, our economic productivity in the long run. And I think this is a wake-up call to us to say, we need to get the fundamentals of our economy in order. If we don't, I've used this quote before from LKY from Singapore, otherwise we become the poor white trash of Asia. And I think that's the message to take away.
Absolutely. We've got to do more about value adding here to capitalise in our magnificent resources. Stephen Hamilton, thank you so much indeed for your time.
Cheers, Andrew.